All right, I can say a prayer.
Okay.
Our Father in heaven, we're very grateful, Father, to be here at this time. We're grateful, Father, to talk about this case. We ask you that we may learn from each other and that it may help us analyze this case further, business in a more dynamic manner. We love thee. We say these things in Jesus Christ, man.
Amen.
Amen. Thanks.
Any spiritual experiences?
Yeah, I was home teaching this week, and it was one of those days where I was less prepared, less driven. I was kind of doing it to just do it. And I was visiting the girl we were home teaching, and she basically at the end of our lesson and kind of our prayer, we were a little rushed and just because I was busy and I kind of like put it in the back burner. Well, at the end, she kind of bore her testimony and said, because of your guys' example, I have this spirit like better in my life and been reading more and praying more. And it was just a moment that I got hit and realized how important home teaching was, and that it shouldn't be something you kind of forget, and that we're there for a reason. And it was just kind of the Lord slapping my face a little bit and saying, you need to focus more on this, or like pay attention to why this is important.
Yeah. I think that's true. I think it's hard to really understand how much of an effect any of those type of things have in the church,
Yeah.
And we take it for granted a lot. And it's probably something that Satan wants us to continue to take for granted, because it's those little things that make a difference by small and simple means,
Yeah, and it's something that,
that.
it's kind of something, we have a busy life, and it's not always the first thing we think of.
Yeah.
All right. So the first question is, use of Brentwood Associates Management. You must decide whether or not you will exit Zoës Kitchen now, and if so, best exit option. As a group vote, do with Zoës Kitchen out of the three: IPO now, sell to a strategic buyer or financial buyer, until it is more valuable before exiting. What do you guys think? What's your vote? Yeah. What about you, Zach?
It was hard.
Yeah.
There were so many factors that were positive and so many factors that were negative. But in the end, I kind of felt like waiting was a little bit of a better option, but I could argue all three of them probably pretty equally.
Yeah. So the thing is like the business is, well, I guess I'm a little mixed. Like, I either want to go public now, or maybe wait and grow the business a little bit more.
Mm-hmm. Yeah, that was my initial thought.
Like the
jobs thing, and then go. And if that doesn't work out, then wait. Right? That was my initial thing too.
The thing is apparently there's a small window where we can get the IPO done, or at least there's a window for IPOs now at that point where it's successful. And so if we were to wait, we might not be able to get as much of a return or awareness as far as a public option goes.
But at the same time,
so I think for the most part, my vote goes to the IPO. Go ahead.
I was just going to say, but at the same time, they mentioned in the case that the IPO process takes so long and that they were in a recession. They didn't know if maybe it was just a trend, and if it took too long, they might not IPO as well. the time the IPO
Well,
was established, and
See,
they
I
said
took
6 to
that.
9 months, right?
Yeah, well, it could take longer. It said, but
Is it
my
really
thought
that long?
on that paragraph that said, that the window was small. I thought they said that he thought it might be small based on the last um, little bit of the economy, but it could be larger. Like it could stay open for longer. So that was my thought on
Yeah.
it. And with the trend in the exhibits, I mean, it's going up, IPO offerings in general, and definitely up from 2009, 2008. So my thought was he's worried about it being small, but it could be larger.
Yeah.
So
See, the thing is yeah, it's a successful company. Everyone says it is. Excited about it. It's had great revenue and profits for the last, like, ever since it's been open. Been really well accepted by the market. It has a lot of things going for it because it's kind of this niche. It's just really successful right now, and I doubt that it's going to continue to be successful if this board, Brentwood Associates, onto anything too long, right? And they pretty
yeah,
much have been with Zoe's Kitchen for about 5 years.
hmm
That they would kind of, you know, sell it and get some kind of return. And so, if that's what they're concerned about, they're going to get the best return out of the IPO. There's no doubt about that.
yeah,
yep.
And so if that's so, I guess my reasoning just goes back to what do they want. And from the reading, it seems like they'd rather get a return now. The return with an IPO seems like it would be much larger than doing a strategic buyer or financial buyer. I don't know. What do you guys think?
yeah. I agree. And like my initial thing was to do the IPO, especially with the Jobs Act, because that seemed really a lot safer. But I also think that I mean they have 30 stores opening in 2014, right? So they have a lot
Yeah.
coming up, and that he's worried about the IPO being really small because they are only at what 11 million, whereas Noodles and companies at 300 million. I mean, that's a
Mm-hmm.
huge, huge gap. And I just wonder, I mean, I was looking at these numbers and I mean, tell me if I'm off or wrong, but if they did the IPO now, regular IPO, and they eventually, because it's not all up front, right? So if they eventually got the 21 times EBITDA, they would still be minus the 10 to 13 million. So I put it at 12 million, and it's and that's part of the expenses. I think that they might have to pay that before. I mean, right, the expenses would be payable before they get all that money, and so that could be a financial strain on them. Plus the 1 to 2 million reoccurring expenses for the SEO every year. And I just wonder if it might be too much strain on them when they're still this little. And
Well,
yeah, go for it.
I think they kind of went over that, right? Like, um, they were kind of talking about. They said, um, they're talking about the success of the kitchen and how well it's been managed. They've been doing
Yeah,
everything right from the get-go, right?
yeah,
And
yeah,
they said, do we even really need investors? I mean, could Zoe's Kitchen expand with these 30, new restaurants coming out on its own cash? And it could. So I think they're already in a really strong position as far as their own cash goes. I think the question is just where are they going to benefit more? You know?
Yeah.
I don't know.
I guess my biggest thing was, I think that they're a little small right now, still, and that
Well,
they
yeah, they're not as well
lot.
established as as other companies,
Yeah.
just
But
because they haven't been around as much.
yeah, for sure. I think the part that got me was at the end, and he was saying that he would rather not push it. What is his name? Um,
Wall or something.
Yeah. He was saying that he'd rather not push it. That if it's, I think it was like the last page. Um,
Rather not push going
yeah,
public with the board.
yeah. So I mean, that kind of made me rethink a little bit, and also he's really worried about the public offering, because if it doesn't go well, then that's a permanent taint on their brand, right? For Brentwood, and he's worried about it going well. And their last one was the starts with the Z as well, I think. Their last public offering was 8 years ago. So I understand that part of the company, like they need to have something else out there by this point in time, and there's a pressure for that.
Mm-hmm.
But I think that they can do better by waiting just a little bit more, gaining a little bit more weight in the business, and then going the IPO route.
Yeah. He left us.
Otto,
What do you say?
what do you think?
Oh, one thing that stood out to me in the case was that he was talking about how, as a small company, when you go public, investors basically control your company. So your quarterly numbers have to make them happy, which basically changes how you run your company, changes everything, and that could potentially crush a small business. And he was saying any big investors might not invest because even though they are running it successful, investors look at a history trend in cash. And if they don't have enough years, they might not be comfortable. And then the third point about investors that they said that really kind of stuck out to me was, if one restaurant in the industry starts to fail, they might sell out quickly for every restaurant they're invested in, even if Zoës is performing well, because they think the industry is falling apart because they're really cautious and don't want to lose money. So a lot of public is really hard for a small business, I think, because there's those outside factors that another business may fail in the restaurant industry and it has no reflection on your numbers, but all your investors sell your stock, which then lowers your valuation significantly. And potentially at a small business, you might not be able to raise your valuation that quickly. Those were just like some of the weaknesses I saw in going public. Now, granted, I do agree with you. Going public is the best return for Brentwood. If
Yeah.
Brentwood's looking at this Brentwood and they're saying, look, we want an exit strategy that's going to give us our highest return on investment, it's going to be going public. You can't sell it to a third party pulling in 20 times your earnings or your EBITDA. You can't do that. And so, even if they grow it a little more, he did say there's potential that they'll have bigger investors, bigger private equity firms, which might increase your multiples a little bit, but still your public is going to be your best option always.
Yeah.
Negative factors that I feel could be mitigated by growing the business a little bit more to secure that, the history and as you were mentioning that they have like a cash restraint with how they were saying it's like $11 million in expenses just to launch the IPO. They need to be prepared for that, having a nest egg or something.
Yeah, I thought it was really interesting.
Well, how much are they making a year right now?
Well, they said they pulled
11.
in $11 million in EBITDA in 2013, but that's just the business. But Brentwood did say they had a credit line for like 30 million or something.
Yeah, that's true.
So technically, Brentwood, if they funded it, they could put it out, but still, it's going to be then payment out of Brentwood and not out of the business. And so Brentwood
Would be
is
in a
now
risky
investing
position.
$1 million more into the business that they're going to want to try to get back as quick as possible.
Yeah.
So,
I thought it was really interesting throughout the case how well prepared the business is for an IPO, though. I mean, like the managers are on board for it, and they've had people calling about it. I mean, that's always a great sign. And I thought that was a real strength for selling it at the IPO right now. But yeah, I mean, ultimately, I just think they should wait a little bit and then sell at the IPO. But
There's a potential of losing. Like, I don't know, like the company is not that small. I mean, it's compared to like news company.
mhm.
It is small, but they have places, states, right?
Yeah.
Yeah, not with 30 new restaurants. Um, and oh shoot, what was I gonna say? Well, and so the people that are interested now are most interested to make a really good profit after the IPO, right? Because since it's undervalued, because if they consider it undervalued, like the investors that are interested that are calling in, go public. And if it's undervalued and it does much better, then they're going to make a lot more in their investment. Mm-hmm. And so that's why investors who are looking into IPOs, they're looking for those type of companies. If Zoës Kitchen becomes has more awareness, becomes more popular, it may detract from we could have now. You see what I'm saying?
Yeah.
I don't know. So yeah, I think you guys are right. I think it's just there's every situation.
Yeah, something I was thinking was it just depends on what Brentwood really wants. Do they want to exit quick to open their portfolio, or do they want an even greater return, right? And something I was thinking about, yeah, they have 30 stores new open. Investors who may say, look, maybe you spread yourself too thin. We don't know how the 30 stores will perform yet. It could be that they launch 30 and then those 30 stores aren't pulling in the EBITDA like the other ones are. And so, I mean, I think they will, but I'm just saying investors are pretty cautious when they invest most of the time. At least big name investors are.
I think in that situation, you can only go back to the history, right? Because every restaurant that came out so far in different states has performed almost exactly the same. Right?
Yeah.
And you never know, but what ifs and I mean, we could do the what if, game all day long,
And that's kind of the weakness I said of waiting too is, how long until you stop? How long do you say, oh, well, let's wait another 2 years. Oh, let's wait another 2 years. How long until you eventually get to like selling, So I saw the weakness in that as my, thinking of waiting and building, how far does that go, or how deeply do you analyze the IPO into basically scaring yourself out of an IPO? There has to be a line you draw eventually where you just say, look, this is our decision. We're going to make it. But yeah, that was kind of the weakness that I pulled out of the decision of waiting is, how long will that go on for? How long do you keep pushing it? 2 years, 3 years, 4 years,
let's,
I guess
let's move on.
something. Sorry,
Go
go
ahead.
ahead. All right, I guess something to consider too with this is that as of right now, they've already had a return on this, right? Like
Yeah.
they're already making a return on this business.
Yeah.
So, I mean, I guess you would add that to whatever return they're expecting to make, and that would make it greater. But I think one of the things that Brentwood is concerned with as well is their reputation. It was stressed a couple of times in there that they want to do well so that they are seen well, right? And I don't know, I think doing the IPO right now would have an advantage for them that way because they haven't had anything in a while. I think he said it was 8 years since the last one. And so that would boost them that way. It would get more coverage. But in the same respect, having it sell for higher would do the same thing in 2 years. But I think he's just really concerned about that reputation and making sure that the IPO would go well. He classifies it as a risky thing to do. I think twice in the case. So I mean, it has risk with it, but
What's a risky thing to do?
the IPO. He says in the beginning that
Yeah, I think. Yeah.
risky,
Well, I
but
think that you were saying earlier. I mean, IPOs are always going to be riskier, you know.
Yeah.
And that just comes with the possibility of return. You know, anything
yeah,
that has a potential of higher return is going to be risky. Yeah, let's move on. So why does Brentwood want to exit now?
I was thinking, they kind of had an average trend of do that like 5 to 6 years. They obviously have a certain portfolio size they can hold with, their private equity funds and their venture capitalist funds. And, I think Zoe's is at its kind of pinnacle right now, where if they dropped it IPO, it would be successful, and then they could just pull out and do something else.
That's kind of their.
Yeah.
Right?
I think if you hold it for
They
too
grow a
long, then you
business.
tie up your people, you tie up your funds, you tie up your time, you tie up everything.
yeah, I agree. I didn't really see any reason for them to exit besides that. I mean,
Yeah.
just a normal time for him and stuff held up in it.
Yeah, why would if you have something that's good? Why would you? But then again, they're not. They're not the. Their business is to function like that.
Mm-hmm.
Business isn't to function like they're not supposed to manage a company for a long period of time.
Yeah.
What are some reasons for holding now? I think you have a lot of reasons, Chantel.
Yeah, I mean,
What are some?
already got them, but I mean, they are releasing the 30 stores 2014. That's just next year. That could boost everything a lot. I also think something interesting in the case was that they did upgrade a lot of things, the seating, the lighting, all that stuff, and it took the amount they needed to make from 800,000 to 1.1 million. And I wasn't sure if they caught up on that. I think they had, but there might be just a little bit of lag left with that still. And so, I mean, that holding out would, I think, stabilize that situation if it's not already. And yeah, I think it would just give them a stronger position overall when they go to IPO or making more revenue and not being, I mean, they're not small, yeah, but Adderwalt says that they would be one of the smallest revenue-wise offerings in the whatever category. So yeah.
Yeah, but then again, I agree with that. Like, that seems kind of odd that they might start out now, because they are smaller in that sense, and they would be the smallest to come out. But then again, the whole idea of doing an IPO is to, they call it a roadshow. They go out and they say, hey, go public, you could do this, it could do that, it'd be good for you to invest, that kind of thing. And like, I think smart investors, during the IPO, I think there'd be a lot of people attracted to it. So if it went to the IPO, I don't think that they would have any trouble whatsoever finding investors, to start out with it. I think the question is just whether or not it could be bigger, later. So I don't know.
Yeah, I thought that like I said, the original, the Jobs Act with the IPO is really attractive. I mean, it keeps them safe per se, right? It keeps their reputation and valuation stable, and it doesn't affect that. And so if they did, I think that would definitely be the way to go, is under the Jobs Act, doing it that way. And I mean, that it looks great that way.
Yeah. Right under each scenario, what can go wrong?
I think we kind of talked about that. One thing we didn't really hit on is selling third party. It almost seems like that's just not even a good idea at all. Selling to another private equity firm.
Yeah.
It could be, the least risky because they don't have to worry about the IPO risks, but your return just isn't justified. The difference in value, if you sell at the highest multiple for a third party and you take the IPO value in the end, is about $88 million in difference. If you take the EBITDA with the 21 multiple and the EBITDA, the same EBITDA of 11 million with like that 13 multiple, your difference is $88 million. So that's a huge loss. It's almost $100 million you're losing money on if you sell a private party. So I just think I don't see a lot of benefit in that. I mean, your really only two options should be IPO or waiting, and then IPO and selling. I don't even think you should wait and sell to a PE later. But I don't know. I was just bringing that up because it was the other option that we didn't really talk about, and just I don't see.
I agree. The numbers don't support it. I mean, it's like the average is 8 to 13, and that just is nothing compared to the 21 of. 21 times the. You say EBITDA? Is that what it is?
EBITDA.
EBITDA. Okay. I mean, that's just nothing compared to it. And then you have the $1.5 million or 1.5% purchase price expense on top of that, plus the $1 million legal fees. And I mean, it just brings it down so much. And I mean, it would be attractive in that, they said it would take maybe 3 months to do the whole sale. And that's attractive, but I don't think they're looking for like a really, really quick exit. I mean, they're looking to get rid of this, eventually, because I mean, that's what they do. But I don't think they are looking to expedite something that quickly just because they can. They're looking to get the most return they can on it. So I didn't really consider that just because it's so low.
But I think we kind of hashed out the pros and cons of the other two, at least.
Yeah, pretty much.
Yeah.
That one up because we didn't.
How much is Zoës worth under each exit option? Discuss with each other how you got your answers as a group. Consensus on as to what Zoës worth is.
So the valuation factors that I did is I took that 11 million EBITDA, multiplied it by a 21 factor for public, and you get $231 million of a valuation. And privately, you do the same thing, but 13 multiple, which comes out at 140 something million. And that's where I got that $88 million difference. Is I just subtracted that's how I valued it, at least. You know, there's a lot of expenses that you could put in and say, oh, it's a lower value, but at the highest level, that's really what you're looking at is the revenues and the EBITDA in the end, right? That's taking out. That's your earnings before interest, taxes, depreciation, amortization.
Yeah. So here, I'll share my screen real quick, and hopefully you can see it. Okay, so that's what I have. The 11 million EBITDA. Under the IPO, you have 21 times, and that's exactly what you said, minus the 10 to 13 million. I did 12 and got this number. And then minus the 1 to 2 million would give you an evaluation of 218 right there, million. And then I did the same thing right here for the strategic. With the 8 times, it was 88 million, 1,343, and then 20 times. I did that because the one company said that it had sold for that under the strategic buyer earlier that year.
Million.
Yeah, so that's what I got for that, and obviously that's just below the 21 up here with the EBITDA at the IPO. Under the strategic buyer, the 1.5% purchase price would be 3.3 million, and then the 1 million legal fees. I think I did that wrong, but I wasn't sure how to do the weight and gain scale. I wasn't sure what numbers to put under there. Yeah, you guys have any ideas about that?
Sorry, what was the question again?
I was just saying I wasn't sure what to do under the weight and gain scale for an evaluation there. Did you guys have anything for that? Any numbers?
No.
Yeah.
No, I don't have.
But I mean, definitely the IPO is the way to go with valuation wise. You get the most for it.
I agree.
So in the case for IPO, what are the chances, right? They could do 21, maybe more, or they could lose everything, or is that even a possibility?
I think what they were saying with the risk of it is that, first of all, it's not all up front, right? It's not like a sale to a financial sponsor. It's a little more gradual. You wouldn't get the 21 times all up front. And besides that, there is risk of when it goes public, that trading might be rocky, right? And that's where the, what was it, the green shoe or something like that comes in, and does the stuff with the 15% over. And then I think beyond that, if that didn't stabilize it, that's when the company would not be going so well. So I think that's the risky part of it. Besides the expenses, that's what I understood. Is that what you guys got to?
Yeah, that's how I understood it as well.
Okay.
Wait, can you say that again?
I was just saying that besides the expenses, the risky part would be that if the company didn't do well after, if it needed the green shoe, I don't know, whatever they call that effect. If it didn't do well after that, after the whatever they're called, auditors, after they did the offering, if they bought that 15% back to help the company stabilize, if it didn't stabilize after that, then it would be all downhill from there for the company. It's going to be really rocky. So
What is that deal called?
the shoe, green shoe, I think it was, right?
It's where like the investment bankers buy back 15%.
Yeah.
Like overscale it. and then they'll buy back the other 15 if it doesn't hit that mark.
Yeah.
To
I think it was
to
agreed to,
control
right? It was,
the pricing and stuff.
yeah.
So you're in favor of that?
I mean, if they did go IPO, I mean that's a good safeguard for the process. So I mean, yeah, it seems like it looks from the case that it's fairly regular to do that. I mean, it's like a normal thing when going public. So, yeah.
What did you observe in the valuations based on who buys the company? Does this make any sense? Discuss as a group. Why would anyone sell to a financial buyer instead of an IPO? I think we've kind of gone over this. I mean, it's just less risky. I mean, you can kind of shop around. There's sell to people who are interested. You don't have to make it a whole public, big expensive. So you can just say, "Hey, we're selling this," and pick the best profit. It's just less riskier.
Yeah, I think expense was another big factor. I mean, you mentioned it wouldn't cost them nearly as much as that $11 million that we talked about for the IPO launch. So I think that was the only other positive thing, is that it would cost way less money.
Yeah, I think they explored it already, but I mean, one advantage or disadvantage, whatever how you want to look at it, is that the way of running the company is different. And we already kind of talked about that as well, that the investors at the IPO level are looking at the quarterlies and like looking at how to run the business that way. And I mean, in the case, the CEO, Miles, was actually a little he said something about it, how like he's always run the company this way since his early career. He's ran companies a certain way, and it said he was very forthright and transparent. And when you're a private company, when you have a problem, you can simply call your PE investors and say the business is doing well, but we have a problem, or we may miss the quarter, and here's why. And he couldn't do that if he was a public company, because there's more rules about investor communications and such. So I guess that might be something for him, but it sounds like he's willing to change his style. So
yeah,
yeah, I mean that's just him as the CEO.
I don't think that should hold you back to do it, because
Yeah.
it's just a personality thing rather than like
yeah, for sure.
But that was a good point to bring up. But I'm just saying, like, he realized that you can't hold it back due to him.
I think is differences in running a public company and private company, and it's just a different ballgame.
Yep.
So we can start our summary right now. Yeah. So starting the summary, what do you guys think? Has your opinion changed at all? What's your kind of final vote?
I think
it's still so hard.
I do think if I was in Brentwood and not focusing on like the company, if I was a Brentwood executive, I would go IPO, because I would get my biggest return. I would open my portfolio, and then we could take that money and reinvest into another business. And I think that's the hardest part, is we have to focus on the cases about Brentwood and not really Zoës. You're talking about what's the best exit strategy for Brentwood, because for them, they want the biggest return. They want to open their portfolio. They're a private equity venture capitalist company, and that's their tradition. They're not going to hold, or they shouldn't hold it for too long and tie up their resources and manpower and money and everything.
I agree. I think IPO probably is the way to go, just in the sense that it's kind of what this person wants. They're trying to get out. they'd rather get out sooner than later, I think. That's kind of the way their company operates. I know that IPO has the biggest return. I think each of us none of us would. I think we all stated that we wouldn't sell to private companies in any way. It's either waiting or IPO, and I still don't think it's necessarily kind of a kick in the butt for Zoe to necessarily. I think they're a good company. I think they can handle it. So yeah, I guess that's my vote. What do you think, Shekina?
I agree. I mean, looking from the Brentwood position, Zach, you're exactly right. I mean, from their strictly business position, they need to get rid of this. It's time. They've had it 6 years, and per their history, that's about the longest that they hold things. If they did go IPO, they should definitely do it under the Jobs Act so they can keep the valuation steady and not risk that. And I think you put up a good point too, Stephen. I think the management is ready. I mean, the case states that he's asked the management how they feel about the IPO. They are ready for it. They're willing to do that managerial style. And so, I mean, for Brentwood, that would be, I think, the best idea, the best way to go.
Yeah, that's kind of the thing about running any kind of company. Like, I'm sure. Well, Zach, I'm sure you face decisions all the time. Working on like you have to analyze and just pick. What do you think is best?
Right. Not everyone can go public. Not everyone can franchise. Not everyone can do. They don't have the business model or that. But in the case, it clearly shows. And they even had someone come in and analyze their numbers and everything and said there's a few small points, but overall, you guys in a few months could go IPO and be fine, And so they had so much positive feedback that they were ready. It was just kind of Brentwood sitting there like, what should we do, But I think they were definitely ready in that sense. But there's always assumed risk 100% of the time. It just depends on your performance, which I think they were ready for. But you're right. Small businesses, you have to be ready in order to make this step. You can't just take the risk.
Yeah, for sure.
All right. Cool. You done, or you guys have one?
I'm good.
All right, cool. I'll upload the